Okay, so maybe you're one of those that's trying to hide the fact that you've bought some cryptocurrency, some Bitcoin, Ethereum, maybe some Dogecoin, because you don't want to pay the tax. And maybe you're just thinking to yourself, does the IRS really care? I mean, do they really care if little old me doesn't pay any taxes? Well, the IRS does care if you don't pay taxes, and if you don't believe me, you can ask Wesley Snipes.
Hey, man, give me my money, man. Hey, it's a money thing, brother.
There's a man with integrity.
Hey, yo, don't you push your luck, man.
Got nothing to do with luck.
So yes, the IRS does care if you're not paying taxes on your crypto gains. Trust me, they do care. In fact, they recently launched an initiative called Operation Hidden Treasure. And the whole point of this is they're working with the fraud department, trying to find those that have crypto gains that haven't paid any tax. So if you think that you can avoid paying tax with the IRS and, do a little thing called tax evasion, guess what? It is not going to work. But I also get it. Cryptocurrency and taxes can be a very complex, very confusing subject. And that's why in today's video, I wanted to answer what are the most common 7 cryptocurrency and tax questions that people have. I want to answer these questions because I don't want you to find yourself in a situation where you're in trouble with the IRS and all of a sudden now you're getting penalized and maybe getting in trouble. And trust me, you don't want to be on the IRS's naughty list.
You're teasing me, you naughty.
Also be sure to stick around to the end because I have what is by far one of the greatest tax hacks that cryptocurrency offers, something that allows you to potentially pay no tax if you structure it right. And this is so cool and unique because this is something you cannot get with stocks, something that you cannot get with bonds or any other security. This is something that's very specific to cryptocurrency, so you're gonna want to find out what it is. Now, before we answer these 7 questions, one thing I do have to advise you on is that I am not a tax professional. Yes, I am a certified financial planner, but I don't do tax, I don't prepare tax. I know enough about tax to be dangerous. So with any cryptocurrency tax strategy, be sure to consult your tax professional. They are the ones that are going to give you everything that you need to know and then some that's very specific to your tax situation. All right, so there's the disclaimer. Let's go ahead and find out what these 7 questions are right now. Let's go ahead and take a look at question number 1. If I sell my cryptocurrency and make a profit, I make money, will I get taxed if I don't take the money out of my account? So I wish that I could tell you if you leave your money, leave whatever you made in your cryptocurrency account that you don't have to pay taxes, but this is not a Roth IRA. There is no tax-free money in this situation. So yes, you have to pay your tax.
Straight up, pay him. Pay that man his money.
Moving on to question number 2. Number 2 is, if I buy any cryptocurrency, whether it be Bitcoin, Ethereum, Dogecoin, Cardano, whatever cryptocurrency that you buy, and if you just hold it as it continues to go up, do you have to pay tax? So here we're looking at you hodlers or holders, whatever you want to call yourselves. If you are just holding and you've not done anything to trigger a taxable event or a taxable consequence, then there is nothing to report. This is no different than if you were to buy a stock and just hold it. Once you sell it, that's when we start looking at, is there some sort of taxable event? So if you are a hodler and you're just holding, no tax has to be paid. On to question number 3. So question number 3 is, if I have a profit, if there is a gain, so you bought Bitcoin and you sold it and you made some money, how much tax do you have to pay? Or otherwise stated, how much tax do you owe the IRS? So this is where it can get a little tricky, but it's also pretty well straightforward. And once again, we are looking at cryptocurrency like an individual stock or any investment for that matter. You're either going to have short-term capital gains or long-term capital gains. Let's start with long-term capital gains. The most that you can pay right now, unless Biden has his way, which we could talk about in another video, but as it stands right now at the time of this recording, the most that you can pay on long-term capital gains is 20%. 20%. So it doesn't matter how much you make, you're capped at 20%. So what defines a long-term capital gain? That means that you would have to buy or bought your cryptocurrency and have held it for at least 1 year. So for 365 plus days, you can't buy it today, sell it 9 months from now. You can't buy it tomorrow, sell it 6 months from now, and it count as a long-term capital gain. You have to own it for at least 1 year. And once again, 20% is the most that you can pay on a long-term capital gains tax. And that's if you're making over $441,000 if you are single. You can pay the most at 15% if you're in that income bracket where you're making between $40,000 to $441,000. So you can actually pay less than that 20%, but 20% is the most that you can pay. So anything less than 1 year would be considered what's called a short-term capital gain. So if you are buying and selling, and 1 year has not passed, now you're looking at what's called the short-term capital gain. And ideally, this is not where you want to be. It's the most that you'll have to pay, and it's just not a lot of fun.
And I'm short, and I love it. I love being short.
So what's so bad about short-term capital gains? Well, let me just say this first. If you are making money, if you are locking in a profit and you have to pay tax, I mean, generally speaking, like that's not a bad thing. I mean, when you are paying taxes on money that you made, yeah, it's not ideal, but you know, you still made money. But with a short-term capital gain, why most people don't like it is that you don't get that favorable tax treatment of paying that max 20% that you have with the long-term capital gains. With short-term capital gains, it's all considered what is called ordinary income, which basically just means that whatever tax bracket that you are currently in, that's how much tax you have to pay. So if you are in a lower tax bracket, that could be good news. Maybe you're in a tax bracket that's lower than that 20% that we mentioned with long-term capital gains. But in, say, my situation, if I were to buy something, if I were to buy Bitcoin today, sell it a month from now, make $10,000 or $15,000, I currently, with the current tax rate, would have to pay 37% on whatever profit that I made. I would much rather pay 20% personally, but once again, if I think that I need to sell something because it's going to go down, I would much rather pay 37% tax on a gain than not have any gain at all. Question number 4, what about lending out my cryptocurrency? What is the tax treatment if I am lending out Bitcoin, Ethereum, or whatever cryptocurrency you may own? So what we're talking about here, the best example I can give you is BlockFi. So I am a BlockFi customer, I have a BlockFi account, and I am currently earning interest on my cryptocurrency that I have held with them or custodied with them, and then they are then lending out to other institutions. So because I am allowing them to lend out this cryptocurrency, they are paying me an interest rate on that. So right now, for example, if you deposit your Bitcoin with BlockFi, they are paying you 5%. If you have Ethereum, they're paying you 4.5%. If you want to go the stable coin route, so for example, USDC or GUSD, in those instances, you're getting paid up to 8.6% interest. And I say interest because that is the key word here, because that interest is treated just like any interest that you would make off a bond or a CD at your bank or a savings or a money market account. So this is treated as interest income that you would just add to your overall income for the year and then add that to your tax bill. So that is how interest works, or if you are lending out your cryptocurrency to earn interest on it. If you're interested in checking out BlockFi and opening up a free account and earning up to 8.6% interest, then check out the description. I'll have a link to a free BlockFi account that you can get open today. Full disclosure, this is an affiliate link, so I do get paid a small percentage fee on whatever you decide to deposit with them. Once again though, I am a BlockFi customer. Started off with $25,000. Currently, at the time of this recording, I have over $300,000 deposited with them. And yes, I am enjoying earning the interest that I am. Question number 5 is, can I reinvest my cryptocurrency to either avoid or defer having to pay tax? And this is a very good question because there are certain investments where you can do a rollover. Most common would be rolling over a 401k into an IRA. In that instance, you don't have to pay tax. There's also certain transactions that you can execute with real estate properties where you can do a 1035 like-to-like exchange. In those situations, you can defer paying your tax. You could do the exact same thing with an annuity. So with cryptocurrency, is there a way to roll over your cryptocurrency investments? Is there a way to do a 1035 like-to-like exchange? Unfortunately, there is not. There is no way to avoid, definitely no way to avoid, or there's no way to defer your tax. So basically, when you buy it, whether you're earning interest on lending out your cryptocurrency or you're selling it, making a profit, you're gonna have to pay your tax. All right, moving on to question number 6. Number 6, I think, is a fun question to ask. And the question is, will the IRS know about my cryptocurrency activities? It's the IRS. It's the government. Of course they know. I mean, Big Brother is always listening, always watching.
Do it. Do it. Look at me.
Well, I'm sure there are platforms that are not compliant to the IRS guidelines. I know for the accounts that I have opened with BlockFi, Gemini, also with Coinbase, in those situations, like they had to verify my identity. I had to sync my bank account to actually get the money in there. So yeah, the IRS knows what's going on because they can look at all those transactions. There is a history. I know, like, whenever cryptocurrency first came out, you know, the whole thing about being anonymous and not be able to find, you know, all these transactions, that you could do all this without anybody knowing. That was very much, I guess, the case in the beginning, but with now, as this thing has exploded, especially with Coinbase, you know, now being a publicly traded company, yeah, the IRS knows what you're up to.
Can't stop it. You cannot stop it.
Question number 7. Question number 7 is, what if I am exchanging or trading my Bitcoin or whatever cryptocurrency that you own into another cryptocurrency or trading it into a stable coin? Do I still have to pay tax? Is that a taxable event? The answer is yes. Even if you are exchanging Bitcoin into, say, Ethereum, if there is a gain in Bitcoin by transferring that to Ethereum, you're not deferring your tax, you're not avoiding tax. That is a taxable situation. Same thing happens if you exchange Bitcoin into US dollars. That there is, if there's a gain, there is a profit, and you have to pay either short-term or long-term capital gains tax. Once again, you can't avoid paying that tax, and even exchanging it into another cryptocurrency or into another fiat, then you're still paying tax, so you can't avoid it.
Cell phone users, beware. The Federal Bureau of Investigation can now hear everything you're saying.
Okay, so as I mentioned at the beginning of this video, there is a tax savings. I mean, a huge tax savings with cryptocurrency that you don't get anywhere else. And it is almost so unbelievable that I had to do some more research just to verify, like, is this really true? I'm like, there's no way the IRS would actually allow this. But after doing some more research, like, yeah, they really do. So what is this huge tax savings? Well, this tax savings is what's called the wash sale rule. And for those who don't know what the wash sale rule, basically, if you buy any stock, you know, any security, if you say you buy it and 3 days later it goes down in value, and if you want to sell it and lock in your loss, you can do that, but you cannot buy the same security within 30 days. that's what's called the wash sale. So basically, you have a $3,000 a year capital loss that you can take, or you can, if you have those losses, they can offset future gains. And with the wash sale, the IRS is just preventing people from doing that. So one would think, oh, with cryptocurrency, it's the same thing. You have the wash sale rule. No, that is the big deal here. So according to IRS, I think IRS Notice 2014-21, and once again, I'll have a link in the description, you can check this out. The IRS classifies cryptocurrency not as a security, but as a asset or a piece of property. So in that case, the wash sale rule is not in effect. So what that means, especially like right now, at the time of this recording, Bitcoin has came down in price, or if you bought any cryptocurrency, Dogecoin, Ethereum, and you bought it and it's currently down, well, you could sell it, buy it right back. So now you have this loss that you've locked in, and then you can jump right back in so that if there is a gain later on and you want to sell, any of those gains are offset whatever loss that you locked in. So that is a big deal, people. Like, that is huge. Now, one thing I have to tell you though, is that what I am seeing, with all these different cryptocurrency exchanges, their reporting isn't the greatest. Now, I have not actually got a 1099 from them yet, so I can't say from experience, but just what I've read online, you can pay some of these these crypto tax softwares to track like all your things. And it really depends on how much trading that you're doing. But like for me, if I'm gonna lock in any losses, I want to make sure that I know exactly what is that unique ID of the transaction, so that I have it. I'm gonna put that in a spreadsheet so I can report that to my CPA and that there's no issue with that. But I mean, y'all, this is a big deal. Cryptocurrency is so volatile right now that if you can lock in some losses and not miss that time out of the market for it to come back, so that is a huge deal. So that way, any future gains that you make, no short-term capital gains, potentially no short-term or long-term capital gains, like that is a big deal. Huge deal, huge deal. As I said earlier in this video, and I'll say it again because it is worth saying, worth repeating, please consult a tax advisor. Yes, I'm a CFP, I'm not a CPA, I'm not a professional tax advisor. I'm just trying to provide some information so that you are aware of what's out there. But taxes, it's a big deal, and you don't want to be stuck with a tax bill paying more than you should have, or not be able to capitalize on a loss that could save you potential tax savings. So once again, consult your tax professional. They're worth it. Pay the money. Pay the money. It's totally worth it. All right, y'all. Hope you enjoyed this video. If you did, you know what to do. Like, subscribe, all that good stuff. This is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.
Bye.